Deutsche Bank introduces negative interest rates. Let's have a look. Hello everyone, Florian.Heise here. I've got my afternoon stein of coffee, and I thought we'd have a look through this article discussing negative interest rates being introduced at Deutsche Bank. Now, we've heard of negative interest rates before, and apparently they're only just for, institutional investors. But here we now have retail investors with deposits over 100,000 euros. And sure, for a lot of people, $100,000, and for me, 100,000 euros is a lot of money. But for a lot of middle-class people, particularly those who've saved a long, over their lifetime, that's a decent amount. Maybe they put it aside for retirement. They don't trust the whims of the stock market. So they put it in cash. Now they'll be punished. Remember when we were looking at the cash ban and all the public consultation they had, and how they justified the cash ban by having a few town hall meetings, and a few whingers were saying, oh, someone's getting an unfair advantage because they do cashies. And that was enough. Then when the Senate was going around the, Sydney, meeting people, having public hearings, oh, the negative interest rate's not even part of the problem. This is a legitimate concern. It's happening in other parts of the world. Remember, we're at our cash rate now. It's at 0.25. You would have asked 5 years ago if that our Reserve Bank governor would have even imagined that were possible. I guarantee you, I bet you can't. He'd say the same thing he's saying now about negative interest rates. It's not about if it can happen or if it will happen. It's if you trust the people that say it won't happen. So here we have Deutsche Bank introduces negative interest rates for deposits over 100,000 euro. Now, I've translated this article from German because, surprisingly, there's been no mention of it in the Australian media. I couldn't find anything on news.com.au, nothing on ABC. So, I guess it's a couple of days old. So, forgive me if there's some grammatical errors. But you'll probably understand, because I actually learned German as a child before I learned English. So that's the excuse I use for having atrocious spelling and why I get things around backwards sometimes. We'll just blame that. We'll blame that. So you can get an insight into how I think. Maybe that scares you more than anything. So, from Frankfurt, Deutsche Bank will soon introduce negative interest rates for large deposits in its retail banking business and that of its subsidiary Postbank. The ongoing pressure from negative interest rates makes it necessary for Deutsche Bank to charge custody fees for new contracts for high deposits beyond an allowance of 100,000 euro per account from the 18th of May 2020, a spokesman for the institute told Handelsblatt on request. I'm assuming, is that the name of the paper? Yes, it is. There we go. And I'll link to this if you want to read it in the original German. The custody fee should amount to 0.5% and thus corresponds to the fees that the European Central Bank charges banks for money parked there. Now, here's the thing, guys. These used to exist back in the day. You'd have to pay custody fees. And that was when you had money that was based on silver and gold. Real money, not the currency that we have now. Not the fiat that we have now. So, this helps us on the earnings side, but above all, it helps to prevent further inflows of particularly high deposits that cost us money, wrote Manfred Kumpf, head of the bank's German private customer business, to his employees. This applies especially in the event that other banks continue to adjust their terms and their customers are looking for an alternative for their deposits with us. I mean, who would have thought the banks want to avoid deposits? And it just shows you the whole system. I guess we are living through history, aren't we? I guess we need to learn it again. So far, Deutsche Bank has only charged large corporate clients and very wealthy private clients negative interest on large deposits. The new regulation for high private customer deposits of more than 100,000 euros applies exclusively for new contracts in the private customer business. Existing account contracts are not affected, said a spokesman for the bank. Well, so far, at the moment. So they're discouraging people from depositing money into the bank, into Deutsche Bank. How many of their existing customers may think, nope, I'm not taking this risk, I'm going to find somewhere else to park my money? Or do they want you to lock your money in the bank? What options would we have here in Australia? Big four? We've got the cash ban coming in. You can't spend more than $10,000. Germany doesn't have the cash ban. They actually fought it. They fought it in Germany. They didn't get it in. We'll have to see if it hits the media again here. Customers with lower deposits were also spared. In the broad customer business with relatively low deposits, Deutsche Bank does not pass on custody fees for deposits to customers. Oh, that's nice. That's really nice. Deutsche Bank is not the first institution to charge negative interest rates for large retail deposits. The money houses pass on the penalty interest that the ECB in turn demands from credit institutions. While this price policy in Germany initially only affected corporate customers, the strategy is now also making an impact on larger retail deposits. In September 2019, around a quarter of all sight deposits by private customers were affected by negative interest rates, according to the Bundesbank November monthly report. Since then, the number of banks that have introduced such charges has continued to increase, so more and more of them are looking at this. Remember, this is just another jurisdiction, so why can't it happen here in Australia, guys? At least in Germany, they can go and take all their money out, their 100 grand out, stick it at home somewhere, and then spend it in big chunks. You won't be able to do that here in Australia. You'll be considered a criminal. But no, that's according to our senators, that's beyond the scope of this review. It's not going to happen. Do you trust them? Let me know in the comments, guys. Let me know. According to the Institute, the negative interest rates affect current and call money accounts as well as certain investment accounts. New contracts for savings accounts, such as Deutsche Bank's fixed interest savings or Spar card accounts, however, are not affected until further notice. I wonder if here in Australia you start getting charged negative on your super, even more fees. In its quarterly outlook, the bank announced that it was planning to take advantage of price adjustment opportunities in Germany. That was probably due to the negative interest rate. Low interest rates have a noticeable impact on the institute. The bank was only able to increase its income in the private customer area in the commission section, and interest income shrank despite the growth in the lending business. This particularly affects the German division. After all, only wealthy management and international businesses achieve earnings growth in the first quarter. Okay, that's probably a bit of a grammatical change. In contrast, earnings in Germany's import businesses for the bank fell by 1% compared to the previous year. The bank had originally hoped to increase in Germany this year, so they were hoping to grow in Germany. The institute, which is referring to the bank, Deutsche Bank, now only expects stable earnings. The planned earnings growth in the investment and lending business is likely to be consumed by the negative effects of the low interest rate environment that the pandemic has us under. It says quarterly report, and this is prepared by Yasmin Osman. So, there we go, everyone. Germany has introduced negative interest rates for consumer customers of 100,000 EU. Can you see that happening here in Australia? Oh no, it'll only be for the big corporates. A few months later, it'll be for 100,000 Australian dollars. And if you haven't seen any of the cash ban stuff, because I still talk to people when I go out there. Like the other day, I got the car repaired, and I had to pay the insurance excess in cash. And it was funny, the woman there, she's getting the gloves on and everything because, we're in a crazy world. And I told her, well, we got to spend it while we can before the government bans it. I was telling her about the cash ban, and she was shocked. How many people still haven't heard about it? That the government is pushing this through? We'll have to see. Hopefully this will be thrown aside. We don't even need it, because so many people just use tap and go. And I don't blame people. I can appreciate it. Has its advantages. It's convenient. But that little 1% here, 2% there that you pay, if you're putting it on credit, or even other transaction fees, it adds up. And some people want to avoid it. So let's have a look, guys, before we finish up. We'll just jump over here and look at the German economy. It's third in the world, 1.33 trillion in exports, second in the world, and third in the world for imports. And the GDP per capita is 50,000. Just look at the complexity of everything they're exporting. And look at what they're importing. I guess we can't really compare Australia to Germany, everyone. But there we have it. Germany has gotten negative interest rates. Thank you all for watching. Please like, share, and subscribe to the channel. As always, please let me know your thoughts and opinions in the comments below. If you're a fan and you want to support the channel, there are a few ways you can. You can join the channel on YouTube or on Patreon. You can support us via our affiliate links at Amazon or eBay, or Independent Reserve and Kucoin. You can also support us by buying our merch from HeiseSays, sending us gold from Gold Pass, and, hey Frederick, I'm nearly finished. You can play Lumion, and supporting us via PayPal. Thanks everyone, guys. I'll see you next time.